In a thunderous move that's shaken every household in Pakistan, the Finance Bill 2025 has dropped. And it's not just a budget, it's a fiscal earthquake. With over 600 billion rupees in new taxes and enforcement measures, the government is charging full speed toward an eye-watering 14.13 trillion rupees revenue target for the next fiscal year. But how do they plan to get there? For the first time, the bill grants sweeping enforcement powers against non-filers, freezing bank accounts, banning the purchase of cars and property, and introducing a new era of financial isolation. The government's tax net is expanding, and this time no one is flying under the radar. After subtracting minor reliefs worth 58 billion rupees, mostly for salaried workers, the net burden still sits at a massive 623 billion rupees. The math is chilling: 281 billion rupees in fresh taxes and a staggering 389 billion rupees in enforcement actions. One of the most controversial moves? A 2% tax on the gross value of goods sold online. That's right, e-commerce is no longer safe. The government is tightening its grip on digital transactions, turning banks, courier companies, and payment gateways into tax watchdogs. Every rupee is being traced. Withholding tax rates are also rising sharply. Cash withdrawals by non-filers will now be taxed at 1%, up from 0.6%. Services see a jump from 4% to 6%. Profits from debt move up to 20%, and dividends shoot up to 25%. The message is clear: if you're not in the tax net, you're in trouble. And even the basics aren't safe. Imported pet food, cereals, chocolates, and coffee, now slapped with full retail-level sales tax. Solar panels, once tax-free to promote clean energy, will now cost 18% more. Households and businesses trying to go green will pay the price. As for relief, it's limited: a 1-year extension in exemptions for FATA and PATA residents. A small tax cut for those earning under 3.2 million rupees. A slight drop in the surcharge for salaried individuals, from 10% to 9%. But let's be honest, these are drops in an ocean of new financial pressure. Even traditional breakfast items like shirmal, vermicelli, buns, and rusks are losing their tax concessions. Sure, the government says staples will remain tax-exempt for low-income groups. But with prices rising across the board, will that relief even matter? The Finance Bill 2025 isn't just policy, it's a wake-up call. It may help the FBR hit its targets, but it does so by shifting a crushing load onto the shoulders of ordinary citizens. For the average Pakistani, the coming year won't just be challenging, it'll be a test of endurance.